Nigeria's crude oil exports are projected to fall by about 14% to roughly 793,000 barrels per day, reflecting weaker scheduled loadings across key grades. At the same time, Nigerian crude is trading near $70 per barrel amid escalating geopolitical risks linked to Iran, which is tightening global markets. These developments come at a sensitive time for Nigeria's economy, as oil remains the country's main source of foreign exchange and government revenues. We have now joining us Bolarinwa Durojaiye, oil and gas technologist. Good morning and great to have you on the show.
Good morning, Joanna. Thanks for having me.
Yes, a pleasure. And I mean, a lot of shifting dynamics within the oil space. Oil prices are up. Let us into what's driving that as well. Dollar is also down. So how are all these dynamics impacting us here in Nigeria and the economy at large?
But like you said, shifting dynamics. So a lot is happening, at the same time. We kind of have a sense of why oil prices are inching upwards. Right now, the markets are pricing in some supply disruption from the crisis or the anticipated crisis or the escalating crisis in the Middle East right now. So that is the primary underlying driver behind the most current oil price rally at this time. At the same time, we are seeing the naira appreciate and show some signs of resilience in this current climate. So interesting times, really, and I'm sure we'll get into more of that in the conversation.
Right, we are pressed for time, but looking at oil exports, the volumes continue to ebb or fluctuate, should I say. Do you see that having a potential impact on foreign direct investment inflows, particularly in the energy sector? We know that we have been pushing for investment in that sector, but how do you see that affecting inflows when it comes to investment, and how might that also feed into broader FX market perceptions?
Right, thanks for that question. So it's important, not to conflate oil production numbers, which, we're not hitting the target we're supposed to hit. But the conversation here is about export volumes. And again, like you said, shifting dynamics. So this is an estimated or anticipated number for March export loading program. And for all you know, it will probably change before then, depending on what direction these geopolitical winds take. If the crisis in the Middle East escalates beyond certain levels, definitely the export picture for our crude will also change. There's a long time between now and March, so I will say that much regarding that. With regards to FDI, some of the announcements that have been made in recent times, investment announcements, and it's important to remember that the big difference between FDI and FPI is that FDI is stickier. You don't come to those decisions lightly. You price in a lot of factors, a lot of assumptions, and a lot of estimations that are not medium or short term in nature. So I think that we've seen final investment decisions being announced, and even really quite recently. I see this sticking, really. In terms of future FIDs, a risk to that in the light of, these kind of risks on the horizon. It remains to be seen. But again, the dynamics are shifting. There's a lot happening at the same time. It's really hard to say.
And one cannot even really predict some of these happenings. But one of the most fascinating events in the industry, anticipated in the industry in 2026, is the anticipated divestment by NNPC of some of its equity in certain assets. We've seen some pushback from labor unions. Why so? And how do you perceive these deals reshaping the industry ahead?
Yeah, it's interesting you say you're talking about labor unions. But they're there to protect, the jobs and the livelihood of their members. It is what it is. However, My take on it is that these divestments have a net positive effect in terms of job creation. Um, especially because of the nature of the divestments, you see a lot of indigenous participation. I mean, we're seeing and hearing the announcements going on every day, and these indigenous players are not here to play. Pardon the pun. They are here for serious business. There's a lot of energy, a lot of ambition, and the results have been demonstrably clear in terms of increased output and increased outcomes. So with divestment comes more local participation, more companies. Inevitably, in my thinking and looking at what's been happening, more jobs. So I think that the union's concerns can be assuaged at this time.
All right, and hopefully they get that memo. Also, Nigeria did not conduct a bid round for almost 15 years, right, between 2005 and 2020, leading up to the current that led, of course, to the low production levels and consequently the economic challenges we face. But since 2020, Nigeria has now had 5 NUPRC bid rounds, including the 2025-26 round. One launched last month. We are seeing lower entry barriers, for instance, in terms of cost. Is this a welcome development, and how is that being received within the sector?
Well, indeed, like you said, lower barriers to entry means that at least that initial, elevated capital requirement is now moderated. I think the focus now is in the capacity to execute. At the end of the day, what we want is volumes. We want barrels, we want production, we want output, and we want export earnings. And the focus now is, demonstrate that you can do this. You have a plan, you have a work plan, and you have the resources to make it happen. So it's a net positive effect. The fear that perhaps this lower barrier might, attract less capable participants, I think is overblown. At the end of the day, it's a net positive output.
Mm-hmm. And finally, Africa Energy Bank, long awaited, long delayed, but it's set to commence formal operations this year. How much of a game changer will it be, for Africa, for Nigeria? And do you have any concerns around the drawbacks before now?
I think, generally speaking, and I will kind of address this generally, that African capital for African development is always a good thing. Yeah, we have seen the positive outcomes come from some of the African finance institutions, because it's about focus, it's about prioritization, and the ability to ring fence capital and capital allocations for African priorities. What we find essentially having the firepower to direct capital to what we see to be important to Africa development. So it's always a good thing. It's a welcome development. On the medium to long term, it is a game changer of some sort. It's a step in the right direction. It's a positive trajectory for African development, because these conversations need to be had. We cannot be completely dependent on foreign capital. Primarily because their priorities are not necessarily always aligned to our own priorities as an African continent. So yeah, it's a good thing.
All right, so Africa Capital for Africa Development. Thank you so much, Bolarinwa Durojaiye, oil and gas technologist, for your perspective on the conversation today.
Thanks for having me.
All right.